What's up, guys? This is Sean and welcome to another episode of the iherng podcast. And today we will answer a question from Instagram. This is from Eddie. Hey Sean, this is Eddie here. First of all, a very big thank you for growing such informative channel online. The most direct influence to me myself is that you inspired me to learn about my first property investment, purchase, and to have the mindset to make an informed purchase decision. I recently came across this unit where, according to the developer, this will be a commercial freehold title, and when in the SPA, it will be listed as a hotel suite, which is also means that the project will not be covered by the HDA. According to my understanding after my research online, I believe it means that we need to be more aware on the T&C of SPA. The utilities are more expensive, the loan margin that the buyer can get is, if I were to sell it, is also limited. Actually, my questions are, besides all the points to take note on, is there any other key points that I should be aware of? Thanks a lot in advance, and may your baby and family be blessed with good health and happiness always. So basically, thank you very much, Eddie, for the Instagram DM. I think it's a rather direct one where Eddie came across a unit which is a commercial freehold unit listed in the SPA as a hotel suite and it's not covered by HDA. This seems to be a lot of emails that is coming in. Okay, so let's go back to basics, right? So what is residential, what is commercial, what is industrial, right? When you come to a land title, there's only three types of land title. One is agricultural, then you have buildings, then you have industrial. Then in respective titles, there's this thing called express condition, which means like in agricultural lands, certain land are only designated for oil palm, certain lands are only designated for rubber and etc. So for building, the second one, right, the building titled ones, inside you have residential and commercial, and then somehow mixed development came into play. That's why there was a confusion in the market, like how do I zone this? And in accordance to the local authority, they have this national development plan, right, of the city, like by when this needs to be built and this needs to be built, this area will come out and things like that, right? They will have all these guidelines, and all developments needs to follow this master plan. And with that master plan, that is where they somewhat tweak and determine the zonings. So these zones are like commercial zone, industrial zone, light industrial zones, and etc. In this case as well, you will talk about like building usage, like for example, those residential units across SS2, right? So SS2 is a very, very busy commercial area in PJ, and there's a lot of residential units surrounding. So because of the busyness and prosperity of the commercial areas, right, these houses are allowed to convert their usage, because you are not allowed to operate businesses in a residential title. Like for example, I cannot run a shop, I cannot put a coffee shop in a house just like that one. I need special permission by the government. And accordance to all these master plan and things like that, the building heights, the plot ratio, and the usage are all set, and developers will then need to follow them. So when developers came across their land to be like commercial zoned, but then to them the most important thing is sellability and profitability, which means I need to create a product that can sell. That's how the first kind of like service apartment came about, where we all know condominiums, right? Like condominiums is a very, very old term already, and for those who are still living in a condo, right, it's a jewel right now, because in order to build a building that is categorized as a condominium, right, there's a minimum land size to it. If not mistaken, it's like 3 acres, and per acre I can only build 60 units. So in the 3 acres land, I can only build 180 units. That will not make me money, man. But back then, things were a lot more cheaper, so the price range after I built, right, is still acceptable in the market. But as the cost of everything keeps growing, right, the challenges of selling gets harder, and that's how like units become smaller and smaller. Last time, service apartment of 1,200 square feet, right, it's too small, really too small. Now we have like a 380 square feet unit one. So as developers try to squeeze as much from the land as possible. So if you remember just now the zoning part, some are restricted based on number of units, some are restricted based on build-ups. This is where a department in the developer office will run feasibility study. Like this plot of land, right? What can I build to make the most money? given all these guidelines. Because in accordance to the guideline as well, there's this important element called the car park requirement. For example, in certain local authorities, per 1,000 square feet you build, you need to provide 1.5 car park. And some is calculated based on unit. If you provide 1 unit of condo, you will need to provide 2 car parks. So we will try to think and like, okay, service apartment makes more money, but provided people also buy it like a residential property where people will stay inside or they can actually rent it out and vice versa. So that's how like service apartment came into play. Like the market suddenly just accepts that the units are getting smaller and smaller and smaller. Like in commercial properties, like for this one, hotel suites, right? The main difference in buildings is mainly density, where you have a lot more units, right? A lot more smaller units, and then you will have weird things in the units. For example, the sprinkler system in your unit. So your unit will have a sprinkler system. So that's the first indicator, right? Like usually condos or residential based products, right? You don't need all this, but the requirement for fire is actually higher in terms of office. And then in the episodes of property reviews, we reviewed like summer suites. You can go check it out, Eddie, where it's a office building repurposed into residentials. So the units are rather small, but then the sewage system was sooner or later have problems in the future. But who cares about the future? I care only like how to sell now. And that has always been the driving force for developers. So the main difference, right? Some are pointed out by Eddie. Number one is the loan margin that you can get. Like for residential properties, if it's your first or your second, right, you can get up to 90% of loan margin, which means if it's 700,000, you can get up to 90%, which is 630,000. But if it's a commercial property, right, at max now in the market at this junction, right, you can get up to 85 if you are super lucky and you are super lovable by the bank. Instead of 630, now you can only take like 560,000. So what happens to the difference? Not everyone walk around with like extra 60,000 in their bank account. So this affects the marketing packages by the developer as well, where if you were to look into hotel suites, right, the discounts that they provide is usually higher, like 25%, 30% one. Next would be the coverage of HDA. So HDA is an act created by the government to protect first-time home buyers, right? Home buyers. Anything non-home, the government expects you to take care of yourself. So what does that mean, like protect? For all new properties to be launched in Malaysia, right, the SPA is standardized. As long as you buy directly from a developer, the SPA needs to be approved by the local authority. So you won't have very weird clause, hanky-panky inside the SPA one. That includes the schedule of payments. So in accordance to whatever stage of construction, right, your banks will release payment. Not like whatever the developer say I built, then the banks will release. But if you guys have any chance to look through an office building's schedule of payment, right, the first foundation only I can claim up to 50% already. So what if I jabut, right? What if I can just leave, I like build foundation, then I collect up to 50% already. At that moment of time, the cash I have as a developer is a lot in comparison to what I built. So it's a good time to just leave. Hence, before HDA was erected, there were a lot of abandoned buildings in Malaysia itself. So under the HDA, developers are required to form bank account along with the government body, and there will be a threshold, a minimum amount to be maintained in that bank account. So the developer's cash flow is pretty restricted one. Hence, it's very difficult to become a developer nowadays in comparison to before. Then as a user of the building, your rates, your utility rates are different. Yes, they will say it's very easy to be converted and things like that. Apparently, you need like 95 to 100% of people applying to TMB to convert the building. If not, it's pretty difficult to do. Number two, the density. So you will have a lot more units per floor. Then number three, in terms of car parks, because it's a commercial building, you don't really need to provide as much car park in comparison to a residential one. There's also this thing which I kind of like brought up before, is the fire requirement. Because ultimately it's a hotel, the building management is required to maintain the fire sprinkler system, which means there will be extra cost to maintain this, just to renew the fire certificate. Then only everyone in the building can be protected. As a residential, you don't really need it. You have the fire insurance and things like that. But this one, kind of tricky. And if there's anything wrong with the building, right, for buildings under the HDA governance, you can bring to the tribunal saying that, hey, I got conned, I feel abused, and please do something, and the government will do something one. But if it's a commercial property, again, it's going to be a little bit more difficult because there's no one body that governs that. If you are sophisticated enough to buy commercial units, it means that you are matured enough to take the risk. Ultimately, projects of such, right, like for example hotel suites lah, then they will call like whatever flexi suites whatever suites those small words, right? It's mainly for investment purposes. It means that it's a very high traffic area, hence it's not zoned as residential. So it's going to be surrounded by a lot of offices and a lot of other commercial activities. That means the demand for space is rather high in projects of such. Despite whatever I just said, like on the shortcomings of things like that, right? That is in comparison to a residential purpose apartment. Like if I were to look into investment, what dictates my decision the most is the rental returns. So Eddie, what I would suggest, right? Do look into the surrounding projects and check out the existing rental rates now, and then you reverse calculate whether can it generate the ROI that you want, and I guess that would be the ultimate decision making factor. The rest, whatever, like fire security or not this and that, right? Apparently people don't care when they are using it short term. That's why products of such still move in the market. And I roughly know which project you are talking about lah. So I guess that's about it, Eddie. Thank you very much for the DM in Instagram. I really appreciate it. And for those who still have any questions regarding what I said, do just email me at taniherng@gmail.com, or you can just like Eddie, DM me on Instagram, iherng, and I'll see you on the next one soon. Happy New Year. Ciao.